Well, as it turns out, the cloud services revenue grew strongly, although there was some deceleration, but they were in line. The upsides were elsewhere, and there were multiple upsides. So we saw the Windows business had upside. Gaming had a good quarter. We underestimated LinkedIn, again, unfortunately. The classical server software business also grew more than we thought, and the classic Office business did better than we thought as well. And so the strength of the company is multiple businesses driving the growth. It's not just the cloud business.
This has all been things that have happened under Satya Nadella. I mean, just the broad breadth of businesses, a lot of things that people didn't think were going to be great, like that LinkedIn acquisition. But they've really managed to make hay with all of this. What worries you, if anything, when you look at Microsoft?
Well, there's the obvious macro thing, but that's obvious. In terms of company-specific things, they have been executing broadly very well. We like the fact that they have this broad technology portfolio that you've talked about. They've been reinvesting in that. I very much like the fact that the culture has changed. The fact that they're opening up and working with companies like Adobe and SAP and others, that's a big change in terms of how they go to market. And that's important, and that's helping the business. They're investing in things that probably a lot of investors aren't even aware of, like silicon, for example. This is going to be a differentiator for them, that Microsoft, of all things, is investing in its own semiconductor technology. That's going to be important to the economics and technology of the company.
You know, a lot of the older tech companies, if you want to call Microsoft an older one, they have this issue where we have these fast-growing businesses, we're participating in the cloud boom, but we have all this kind of legacy stuff that's declining, whether it's Oracle or it's IBM. That's been the story. Microsoft seems not really to be in that position, right? I mean, there are other longer-term businesses are doing well. What accounts for the unexpected strength, though, in those older businesses, like you said, the server business and Windows? Right.
Well, that's an excellent question, because there was a thought that I didn't necessarily share, that classical businesses would be just that. They would just continue to decay. But the fact is that it's a hybrid world, a hybrid computing world. It's not one or the other. One is certainly growing more quickly, namely the cloud. But the fact remains that customers will stay with and reinvest in and retool existing technology. And by the way, we see it not only with Microsoft. I see it with some of my other companies, too, that were deemed classical or decaying or whatever you want to call it. And yet we are now seeing broad resurgence, particularly in the manufacturing market. I know you just had Ingersoll on. That is a good example of a reinvestment story going on in classical technology markets.
Jay, we have to go, but very quickly, you already had a buy rating before any of this. You had a $125 price target. You raised your price target based on that?
I haven't got the report out yet, but we've got 20 points of upside to that from last night's close. But let me just say that the strong cash flow performance underscores our confidence in the upside in the name.